everybody. Welcome to the Trading Market Technicals morning call video for Thursday, September 26th. 5 days down for the Dow and the S&P. Dow down 61.33, S&P down 465, NASDAQ down 7, and the Russell down 1. Russell is definitely by far the strongest index of the five that we follow. And the market continues to bleed. Now, this is 5 days in a row for the Dow and the S&P, and markets try to rally in the morning early on and usually fails around 11 or 12 and then just grinds lower pretty much all day with no volume. So that's also a bullish sign. Also, our indicators, which I'll get into in a moment, are really not showing us much to say that that this market is indeed continually headed lower, and there's a lot of fear in the markets. There really is no fear, and I'll show that to you as well. Now, can the market sell off today and tomorrow, and we really start breaking some key pivotal support areas, and then we get our stops get elected? Yes, the markets can do that, obviously, but that is not the case at the moment. We are still in a bull market. We have a short-term trend is lower, and we are coming into some key support areas where the first area would be for a bounce. Remember, guys, when you are in a bull market, the markets can turn on a dime. So if you are short and you're carrying a short position, please put your stops in because you can get stopped out. If you don't have your stops, you can take some substantial losses. So I would not be I would be very cautious on the short side down here. Or I would not be looking to short down here, not 5 days down. I would see what the next retracement takes us, and if that does fail and we run up higher on low volume, and you indicate that the markets are indeed starting to roll back over again, that's a different story. But I wouldn't be initiating any short positions here, unless obviously it's some sort of a day trade. But even then, guys, day trading at a certain level, you're down 3 days in a row, and you are extended to the downside. That does not mean that we can't go lower, because we can. I'm just stating that risk-reward wise, it's just not worth it. And that's where I always say cash is a position. If the tape is sloppy, step aside. Wait for everything to make sense. If you're looking to build a position, a long position, coming in thinking that the markets are going to bounce, or at least take that dead cat bounce higher, that's fine. But make sure your stops are in place. And if you are looking to get long strong stocks. Stocks that are strong, that are holding up relatively well from the last 5 days. You want to short weak stocks, shorts that are getting battered, because the markets will continue to sell that stock down. Remember, guys, you want to buy strength and you want to sell weakness. Bottom line. I mean, it's really simple. Okay, so we do have some indicators that I want to point out to you, and right in front of you is the New York Stock Exchange new low. What do you see here? We don't have anything spiking up, meaning that the markets are moving lower, and really it's the Dow that's really getting hit the hardest. But if you look at it, the stocks aren't really moving. It's the index that's kind of moving. It's really odd, but that's the case here, right? So when you have new lows and you have market really selling off hard, this is what you look for. And you see, we're getting new lows creeping up here. This is not good. Higher highs, and boom. So that's not a good sign. However, when you have this a spike up and we're just sitting below the 100, it's to me right now the sign says that we should turn up at any given time. Now, again, guys, that does not have to happen. These indicators are just indicators, and price is what pays us. But keep that in mind if you want something to take a look at. This is telling me that, the pullback is mildly bullish. I mean, it's still bullish. Okay, so let's take a look at the NYMO. Now, the NYMO, it's telling we're in neutral territory. So we could go lower and we could go higher, in the sense that we have plenty of room to run before we become oversold. So to me, the markets can move much lower before we actually become in an overbought state. An oversold state. Or we can start to rally up higher, and obviously we have plenty of room to run to the upside. So right now we're in neutral territory, not giving us much of anything. Let's take a look at the VIX. The VIX here is really subdued, right? Now, if you think 5 days down, why isn't there fear building up? Well, I think that what's happening here is, on top of the fiscal cliff, we do have end of the month, end of the quarter window dressing, right? We have fund managers realigning their portfolios, selling stock that's in the money, and selling stock that's not in the money, right? Stocks that are dead, and they want to get rid of them before the end of the quarter. So we do have some end of the quarter window dressing. And remind you, we could also have window dressing to the upside too. Big funds want to defend positions. They want to buy the market up to mark up their portfolio for the end of the quarter, okay, and the end of the month. So be careful because Thursday and Friday could be really, it's basically a free-for-all because of what's going on with the fiscal cliff and the end of the quarter window dressing. So right now, there's no fear here. I don't see any fear. Also, take a look at the CBOE, the put call. We ended closing up neutral in this channel. If we were fearful, we would be getting spikes up above 115, 120, but we're not. We're holding in here. So the market participants, there's no fear in the market as this market is rolling over. And it is an orderly pullback. That's another thing for the bullish camp. So remember, we're in a bullish uptrend, right? We are still in an uptrend. Short term, we're in a downtrend, but the markets are bullish and we are in a bull market. So that tells me to be very careful being short because markets can turn on a dime for no reason. Okay, now let's take a look. Lastly is the U.S. dollar. Dollar bear flagged here, broke this bear flag, so it looks like a possibly continuation to the downside. Now, remember, as the Fed was speaking last week, this could be a game changer for the dollar. Okay, so I'm looking for higher prices, yes, and the only way I see higher prices to break above this consolidation area of this little area of resistance of the 20 to 50 and the 200. If it doesn't break above there and start to move higher, then the dollar will indeed stay low and below this area. So we're going to still watch it. We're going to still monitor it. We have no trade in the dollar, but I do like it to the upside. But I do see some extended weakness here. So this is a bear flag. So this does not look pretty on the daily chart. So we'll just have to wait and see. But once this dollar starts to move, whether it be down or up, and starts to break down, you're going to see a lot of movement in equities and in the Forex markets, and that's what I'm anticipating. Take a look at the S&P 500 cash. As you can see here, we did break that uptrend line. We are down 5 days in a row. We are just below that 20 and 50. So in the cash, probably, more than likely, this downtrend will probably end right up in this area here, the 20 and 50. That would be the target for at least a bounce coming into it. So we could get some weakness today, tomorrow, and really hit this 1680 area. And remember, guys, 1680 still be bullish. Okay, take a look at the spiders. Now I did a Fibonacci retracement. I put it down here because it's just it's congested, and I wanted to show you guys from here to here. We have a 50% retracement comes in at 168.30. Okay. 168.30 is just a hair below where we closed, and then of course the 61.8% retracement comes in at 167.04. So that's going to come right around here, this area here, which would put us just below the 50 and the 20-day moving average. And if you remember on the S&P, the cash, we are at 1680, and that's hitting the 50 and the 20-day moving average. Now the 20 and 50 looks like it's going to cross here, but if we get a push lower in the morning today and we reach this area here, I would start looking to possibly buy the dip for a day trade. Okay, and that's only if the markets makes a capitulatory low during the course of the trading day and then starts to rally back up again and takes a pivotal support area down, out, and back up again, and that's something that I would be looking for, some sort of a hammer candle. Now we are up about 2.5 in the pre-market. Now that doesn't mean that we're going to hold, but it's something just to keep an eye on for today. Now, as far as a bounce target, for a target to the downside and then market bouncing, would be this area here, right up in here. So if we push lower and we can maintain this support area, then I would suspect the market to rally back up again. It doesn't have to because I'm saying so, but I would suspect the market to rally back up and then again at least back test and then see where we go from here. That's going to be very interesting in the coming days. And another reason why I say is look at what's happening here in the Spider 30-minute. The Bollinger Bands are pinching, and again, we don't know what direction they break, but if this market is going to move, we are holding that 200 period moving average ever so slightly, and if this market does break lower, we could break lower, elect the stops, and then come right back up again. So use caution, but the market has building energy for the next 3 days. We're trying to rally, we fail. We try to rally, we fail. But there's 3 days of building energy here, guys. So it looks like to me the markets will do something between today and tomorrow. And again, cash is a position. Remember that. If you're uncertain of what's happening and the market's in looking to buy longs because you're afraid to buy longs because the market's rolling over, step aside. Not a problem. There's nothing wrong with that. Or if you're looking to build a position for that dead cat bounce, buy something small, Buy strong stocks. That's what's going to produce income. Now, here we go. 3 days, as you can see here, I showed this to you before. Consolidation, down, up, move. And as you can see here, we have a consolidation again. 3 days consolidating. Close at the lower end of the trend line. Now, let's see where this market takes us in the next day or two. Okay, Dow Jones obviously the weakest of the five, aside from the S&P. 5 days down. We broke the 50-day. Now we're approaching the 20, and that's going to be a logical area looking for a bounce in this area here. So that's going to be our target downside area for the S&P and for the Dow would be the 50 and the 20-day moving average. The Dow obviously broke the 50, so our 20-day would be right in this area here. And Russell holding up fantastic, and that is a good bull case for the bulls. It would be right up in here. This is a great consolidation, sideways consolidate. Now, the Russell could just literally collapse, obviously, but it's a good sign for the bulls that the markets are indeed holding up well, especially a risk-on type effect. And if you go back to me showing you the VIX and the CBOE put call, no fear. So people are still maintaining their bullish bias, and it's interesting that the Russell has not sold off yet, so it's pretty interesting. Okay, transports, same thing. Transports here, yes, we did get an outside day from the previous day. We did break the downtrend channel, but holding up relatively well as the rest of the indices. Now, obviously, the downside target would be we have a couple of gap areas to fill, which would be one here and then one down in here. So the target to the downside would be a gap fill of this area and or this area, which would coincide with the 50 and the 20-day moving average. So we do have some downside targets. We do have initial targets here. Now, let's see where this takes us. Now, I do think that the markets can rally today, tomorrow, or they could sell off in any given time. Now, I know obviously that's not any useful information, but what I'm saying is 5 days down, you've got to be careful for a reversal, okay, at any given moment. So be careful. And if you are trading the market today and tomorrow, definitely be using your stops because, again, guys, we can just literally flush and then roll back up again, or we can just gap up from here first thing in the morning, and then you don't see the lows at all. So just use a little word of caution here. What I'm looking to do today is I'm looking for another extension to the downside and a quick pop-up reversal, and then the market starts to move up. That's what I'm going to be looking to buy the market. As of right now, I'm going to be looking to just step aside. I'm looking for good quality long plays when the market does move up, and I'm looking for really weak stocks. If the market does get flushed out, I'm going to be looking to jump in on weakness. Okay, and here's the Goldman Sachs. As you can see, Goldman lost the 20 and is now sitting on the 50. This is not good for the bulls because, as you can see, let me show you the XLF. We've actually sold off pretty bad. Now, we did indeed stay. We have an inside day from the previous day. I think we closed a little bit up, ever so slightly from the previous day's close. But this needs to take a leadership role here. Financials need to start really legging up higher, as well as the tech. Now, tech really hasn't been so bad, but financials really need to take a leadership role here. And this is what I'm hoping that we get a little bit of a pause, and then we start to break higher again. So we shall see what happens today. Apple took a bath yesterday, down about 7 and change. Now, this is going to need to hold. This gap area of support needs to hold. If we lose this gap area of support, look for at least the 50-day to the 464, and then we would reevaluate it. Again, I think Apple flushes at least one more time hard. I don't know why, but I'm looking at the charts, and from what I'm seeing on the charts, this is ugly. This is not a good-looking chart here. Gap down, up, small little gap ups, and then we start reversing again. So let's see what happens here with Apple. But again, Apple, a lot of headline risk. You got Carl Icahn in it. You got George Soros in it. So you just got to be very careful when you're playing Apple. I'd like to play Apple to the long side myself, but I like to see this come down much more in this area here, come down around the 433 area before I'm looking to really anticipate some sort of a long play here. Okay, and obviously Leslie's the Q, same thing, breaking out of an uptrend channel and 4 days down. But as you can see here, we are way away from the 20 and of course the 50. So the tech is holding up relatively well on this 5-day sell-off. So just keep an eye on certain things, guys. Remember, watch the transports, see what the transports do, the IWMs, obviously the spiders. You got your key areas of support. I am looking for some sort of a bounce play. Again, does not have to happen today. We could flush for 2 more days going into the end of the month. We do have window dressing coming up here today and tomorrow, and of course Monday, which is the last day. So a word of caution: if you're confused or if the tape is too messy for you, step aside. cash is definitely a position. We'll see you tomorrow. Have a great day. Be safe out there.